Welcome back to the channel, everyone. Today I want to talk about how these market makers are trying to hide their significant AMC manipulation with more crime, trying to get APE delisted as fast as humanly possible. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So I want to start by saying that I don't necessarily like nor dislike Spence, nor do I agree nor disagree with what he's been saying recently. He seems to flip-flop between liking and disliking AMC, more than Meet Kevin flip-flops between selling all of his stocks and buying them all back. But I do think that Spence absolutely has a point with his last few recent tweets. Now, Spence tweeted saying, I do believe from what I'm reading that NYSE stocks listed as spin-offs or preferred shares have a 90-day minimum closing requirement of $4 per share. And he said, if I'm wrong, please do let me know, but it's obvious what's happening with Europe not being able to buy APE shares and the 43 million FTDs. Now, when I first saw this tweet, I was thinking, what in the trust me bro information is this? So I asked for a link and did some extra digging to see if I could find some legs to this information to see if it's actually true. Obviously, if spin-offs or preferred stocks have a $4 minimum share price requirement, then these hedge funds and market makers may be trying to push APE below $4 per share to get it delisted from the stock exchange. If they can push APE below $4 per share, it's delisted from the New York Stock Exchange, all of these FTDs magically disappear, it's listed on the OTC counter, which many retail investors don't have access to, as many trading platforms don't support OTC trading. Pushing APE below $4 per share is basically the equivalent to pushing AMC below $1 per share and holding it there. Now, as Investopedia says, for example, on the New York Stock Exchange or NYSE, if a security's price closed below $1 per share for 30 consecutive trading days, that exchange would initiate the delisting process. Now, this is obviously something I've spoken about on this channel a lot before, and after these 30 days elapses, they then have to hold the stock below $1 per share for a full 270 days before the stock is actually delisted. Therefore, AMC would have to hold below $1 per share for 300 consecutive trading days before the stock is actually deregistered from the NYSE. But as Spence tweeted, the regulations are different for IPOs, for spin-offs, for carve-outs, and as noted, for preferred stocks as well. These spin-offs or preferred shares have to have at least 400 separate shareholders. Obviously, check, we've got that, as there's 4 million apes. It's got to have at least 1.1 million shares available to trade, which, check, we've got that. The float is 516 million shares. It has to have a market cap of $40 million, which, check, we have that as well. APE and AMC have a market cap in the billions of dollars, but the minimum share price has to hold above $4 per share. Therefore, if these shorts and these market makers can push APE below $4 per share and hold it there for 90 days, APE is technically delisted from the New York Stock Exchange. And as I said, if that happens, it's relegated to the OTC market, which most retail investors can't trade on, as most retail investors and trading platforms don't provide you access. And obviously, if a stock is trading on the OTC markets, the FTDs aren't tracked, and it obviously wouldn't be reported on the New York Stock Exchange Regulation SHO threshold securities list. Regulation SHO only applies to stocks listed on the New York Stock Exchange and on the NASDAQ, but not to the OTC stocks. Therefore, to effectively cover up their manipulation and their illegal crimes over the last 2 years with AMC, they're trying to get APE delisted. We know that APE is heavily manipulated with 42 million FTDs on the day of launch, and day by day the shares are still not available to purchase in Europe and in the UK. That's obviously because these 516 million shares have been distributed, and there's tons and tons of shareholders and institutions and insiders that have still not yet received their APE shares. Obviously, retail owns 100% of the APE float, but yet somehow only owns around 35% of the AMC float. Now, obviously, that's because the float for AMC is sold multiple times over, and they haven't yet created enough synthetics for APE to ensure that everybody can get their APE shares. Many people are still holding IOUs or still haven't had the shares delivered, and that's why these hedge funds, these market makers, and these shorts are trying to get APE delisted as fast as they humanly can. But as Spence tweeted, he said, my only thoughts are that Adam Aron set up APE as a case study for the Department of Justice and for the SEC to investigate from day one, providing intentional FTDs and naked short selling. I've also just realised that Moomoo is one of the only trading platforms that doesn't have deep ties and deep connections to Citadel. Moomoo isn't owned by Citadel, they're not owned by BlackRock, they don't support payment for order flow, and they don't route trades through Apex clearing, and therefore they're not at the mercy of Citadel, they don't have anyone from Citadel on their board, and they don't have ties with the mainstream media. Moomoo is one of the only trading platforms that is completely separate from this corrupt financial system, and unlike Fidelity, actually settles APE trades instantaneously. And right now, Moomoo is currently giving away 15 free shares worth up to a whopping total of $30,000. All you have to do is sign up to Moomoo using the link in the description below. Maybe this was a plan from Adam Aron the whole time to set up APE, knowing that it would be manipulated, knowing they would try and get it delisted, so we can take all of this information to the Department of Justice and to the SEC and say, guys, look, I have clear evidence of manipulation and clear evidence of intentional, consecutive, and large FTDs. He'd say, I'm not just talking about one day of 1 million FTDs or one day of 2 million or even 5 million FTDs. I'm talking about days after days after days, weeks after weeks after weeks of 42 million, 28 million, and at the very minimum, 5 million FTDs. I think this may be part of Adam Aron's plan to expose the manipulation one way or another. Either APE exposes the manipulation before it's delisted, or it gets delisted because of the manipulation, and Adam Aron has that proof. I think this is Adam Aron's plan to expose the manipulation once and for all either way. Either he exposes the APE manipulation before it gets delisted and it's not delisted at all, or APE gets delisted and he has all of the proof there in his hands. Now, Mum Talk Stocks had some excellent points on why Adam Aron hasn't yet done anything about the manipulation and why he necessarily can't unless he has that factual evidence. PJ Tweet is saying, please make it make sense. Why would Adam Aron stand by and watch his company stock be pummeled day after day if simply by speaking out he could change its trajectory? Why would he remain silent? Why would he want to watch his business tank? Obviously the answer is he wouldn't. And as Mum Talk Stocks tweeted, she said, you're completely overestimating how much power CEOs have over their public companies. She said, why do you think Adam Aron is just chilling and allowing AMC to be shorted? Do you think he can just press a magic button and turn off the illegal manipulation? Let's not forget Adam Aron isn't the President of the United States. Let's not forget Adam Aron isn't the chairman of the SEC. Let's not forget Adam Aron isn't Ken Griffin's boss. He doesn't control Ken Griffin or Citadel or these major banks or the DTCC or the SEC or anyone else for that matter. Adam Aron is simply the CEO of AMC, which is a publicly listed company where shares are traded in the public. Yes, Adam Aron is the CEO and has control over his AMC employees, but that's about it. Adam Aron isn't the boss of Ken Griffin, and he can't tell Ken to stop naked shorting AMC. He can't force Gary Gensler to do something about it, and he can't fire Gary Gensler if he doesn't, and he can't turn around and disband the DTCC and break up the SEC for not doing anything about the AMC manipulation. Adam Aron is just one man, he's just the CEO of AMC, he's just the CEO of a movie theatre company. Maybe if his name was Adam Rothschild and he was the head of the World Economic Forum, then he could do something about it, but not as Adam Aron. But when he has this factual proof that these hedge funds and market makers have been manipulating AMC and APE below $4 per share to try and get APE delisted, then he has all of that factual proof to go to the SEC and force them to do something about it. Something else I thought was very interesting is Jose's tweet about Fidelity handling APE on a T+2 basis. He said Adam Aron filed APE as T+0. No, so why is Fidelity handling APE on a T+2 basis, and why are they just ending his live chats? He said, I understand what you're saying about DRSing shares, just not understanding why the APE purchases have not settled yet from Monday. Now, the live chat respondent said if they purchased Monday, they will settle sometime today, as equities and preferred stocks take T+2 to settle. Now, obviously, Jose replied saying that APE is T+0 as filed and as instructed by AMC, and the live chat respondent just instantly ended the chat without a reply. Obviously, it seems these trading platforms are working on the side of these major market makers, and that's why it's so difficult to figure out a trading platform that you can trust. And I saw something else that I thought was absolutely hilarious that I no way endorse, I no way encourage you to do, and I in no way support this, but Lady Katie sent literal poop to Citadel's office. Lady Katie sent one whole quart of literal gorilla poop straight to Citadel Securities' office in Chicago. Now, obviously, as I said, I in no way support or encourage you to do this. Having literal poop sent to an office must be absolutely horrible, but it is very, very funny. Now, something else that shows just how screwed these market makers really are is this tweet from Unusual Whales. They said the reverse repos by the Federal Reserve hit $2.316 trillion, the second highest ever. Now, obviously, that comes on the same day as the Fed's 75 basis point announcement, which we just heard a few hours ago, and it seems these market makers and these shorts and the Federal Reserve itself is in a lot of trouble. The market hasn't set new lows, it's not even close to setting new lows over the last 6 months, but yet we're hitting the second highest level of reverse repos ever, and we're still not close to setting new lows. I do expect new lows on the reverse repo market when we start setting new lows in the S&P 500, but that hasn't happened and it won't yet, maybe for a few weeks. But to see $2.3 trillion in the reverse repo market, the second highest ever, when the market hasn't even yet set new lows, suggests to me that when we do start setting new lows, we could see this $3 trillion mark. Now, obviously, we can see from the reverse repo chart, the reverse repos have held $2.2 trillion since June now, nearly 3 entire months. I do think this 2.2, 2.5 / 2 to $3 trillion area is literally the very, very top, the very, very cap for the Federal Reserve. And if they do breach that $3 trillion area, that's when everything breaks loose. I wouldn't want to be the Federal Reserve over the next few weeks as we start the next leg down in the S&P 500, setting new record highs in the reverse repo market and new recent lows in the S&P 500. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.